If we don't know more about the Fed might, destroy the value of the currency. I mean, since the Fed's been in charge, they've devalued the currency 98%.
Ron Paul has just asserted that since the Federal Reserve was created in 1913, the U.S. dollar has lost 98% of its value. Let's verify that claim. This interview occurred in December 2009. The U.S. dollar was established by the Coinage Act of 1792. The U.S. dollar inflated 2,314% from 1792 to 2009, so it lost 95.7% of its value from 1792 to 2009. But he didn't say that it had lost 98% of its value ever. He said since the Fed's been in charge. So how much of that inflation happened since the Fed was created? The Federal Reserve was created in the Federal Reserve Act, December 23, 1913. Let's call it 1914, since they probably didn't get much work done in the first week. The dollar inflated 2,142% from 1914 to 2009, so it lost 95.3% of its value from 1914 to 2009, which still didn't quite reach his 98%, but did you notice it's almost exactly the same number as the first one we ran? Interesting, it's almost as if there was no inflation before that, but that's a hell of a claim, so let's double check it. Here's a linear graph of all the inflation from 1792 to 2021. Can you spot where the Federal Reserve was created? That's right. Now, can you spot where we went off the gold standard? That's right, again. This event is actually known as the Nixon shock. Here you can see a longer chart of the inflation rate itself for approximately the last 350 years. Sorry I don't have more recent data for this very useful graph. Notice that the inflation has spiked many times, but it has also dipped many times. Throughout the centuries, it would oscillate back and forth, but then the pattern changed. From 1870 to 1890, we saw a great increase in production, which led to a significant drop in the cost of goods, materials, and labor. This period was called the Great Deflation. Many businesses suffered, and a lot of workers lost their jobs as a result, but most of them found new work in the expanding economy as real incomes grew. We saw some inflation to correct it during the Roaring '20s and another dip during the Great Depression. But then World War II comes around, and the pattern changes again. Here are those two pictures superimposed on each other. See anything interesting? Other than just a couple tiny dots before Korea and Vietnam, and another during the subprime mortgage crisis of 2008, we don't see deflation anymore. The market is unable to correct itself. Prices never come back down. Now, can anyone guess what would happen when inflation is allowed to run rampant without correction? That's right, the thing I just said. Prices go up and don't come back down. Sorry this picture is so small, I'm really trying to line these dates up. Do you see a pattern at all starting to emerge among these three pictures? You see, as the inflation rate goes up, the prices go up. As the inflation rate drops, the prices go up slower. If we get deflation, then the prices come back down. But that never happens now. All of that is to say, Ron Paul was right about the Fed fucking everything up. Now I'll leave you with this picture of the current inflation event today, and I'll let you draw your own conclusions from it.
Today we hear prices are going up significantly. Is that a trend? Are we back in stagflation again?
Wikipedia defines stagflation as a situation in which the inflation rate is high, economic growth rate slows, and unemployment remains steadily high. It presents a dilemma for economic policy since actions intended to lower inflation may exacerbate unemployment. Welcome to 1970.